want to yield to Ranking Member Bush for her 5 minutes.
Thank you, Chairman. St. Louis and I are here today because my colleagues across the aisle have convened another hearing to demonize ESG. While Republicans called this hearing under the pretense the Biden administration is risking hardworking people's retirement funds, research proves that the consideration of ESG metrics is beneficial to workers who invest their earnings. We know ESG is demonstrably a more effective investment strategy for the average worker. Dr. Rajgopal, why do you think it's important for ESG metrics to be publicly available?
So as I said in my opening remarks,
pull it a little closer to you.
Oh,
the mic. Straighten it out a little.
At some point, I'll get this right. So as I said in my opening remarks, the current reporting disclosure model is, in my mind, woefully inadequate. It goes back to the earlier conversation about just showing the price of a car as opposed to the holistic idea of where the car is made, the energy efficiency, et cetera. The idea is that these ESG metrics are related to future cash flows, not necessarily current ones. So think of these as leading indicators of what is to come in the future. So, and going back to the earlier conversation about the credit rating agencies and so on, the credit rating agencies have a far easier problem to forecast. Will the company not pay interest, or will it probably stop paying principal? The ESG conversation, on the other hand, is a deeply idiosyncratic, complicated exercise where you have to look at a mosaic of factors for the 4,500 stocks out there. That's why you don't get the convergence that was referred to earlier. And more data, you need a more robust conversation about these idiosyncratic factors that help raters, investors, institutions, whoever, the free market, to just do its thing and figure out what that might mean for future cash flows and risks. So that's why I think we need to have these things public.
Thank you. Let me also ask you, Dr. Rajgopal, the S in ESG stands for social factors. How does the availability of ESG data impact workers across industries?
So one aspect, an important aspect of S, as you rightly mentioned, is worker data. And again, as I mentioned in my testimony, barely 15% of US public companies even tell you their compensation costs, let alone all the other stuff that we are discussing in terms of, say, turnover, training, gender composition, age composition, what portion of the workforce is part-time versus full-time versus, subcontracted. So all this, as an investor, one would care about this, as I mentioned before, because this tells you about the quality of human capital that the firm has. And I think there's no dispute that there's a strong association with the quality of human capital you have and your outcomes such as productivity, innovation, et cetera, which again affect future cash flows of the company. So worker groups, whoever makes investments, would simply be better off with this data. Right now, it's opaque, sketchy, I would say almost non-existent.
Yes, thank you for those insights. Corporate transparency is a priority. We know that adherence to ESG principles protects workers and protects our communities. I ask unanimous consent to enter a Washington Post op-ed by David Weber on protecting public pension investments. Mr. Chairman.
Without objection to order.
In the op-ed, Mr. Weber tells the story of state workers who suffered financial harm when their pension funds were invested in private sector companies that the state later hired to take over the very agencies where these employees worked. These workers lost their stable state jobs, earning a decent wage and benefits when these private sector companies took over. In some cases, the private companies then rehired the workers at lower wages with fewer benefits. This type of anti-worker privatization has negatively affected teachers, school bus drivers, janitors, firefighters, and more. My colleagues across the aisle might call these anti-worker policies good business because these companies showed a positive short-term return on pension investments. But good business, it should not come at the cost of hard-working families in the long run. Also, Dr. Rajgopal, would you agree workers are undermined when their hard-earned money is invested in companies that then turn around and take away their jobs?
I'd again say I'm just pushing for more data and more disclosures. It's up to them to take informed decisions, whether it's investing decisions or whether they want to continue working for the firm.
Again and again, Republicans value only the corporate bottom line and short-term profits. I am proud to support workers by protecting their jobs and their retirement. Thank you, and I yield back.